Good afternoon. My name is Chris Konetsky, and I'm the president at Business Publications Corporation, which of course publishes the business record. Let's start out today by giving a big thank you to all of our sponsors and all our partners who help make this scale. Let's give them a big round of applause. Again, my name is Chris Konetsky. I'm the president at BPC. We're so thankful that you're here today and taking time out of your day to come learn and prepare for the year ahead. The Business Record and DSM Magazine are here to serve you, your business, and the community, no matter what economic conditions come our way or what challenges or executive orders may be coming down the pipeline. It has been and will be our mission to inspire, elevate, and celebrate our communities, and most importantly, keep you informed and positioned for your business to succeed. That's, of course, why we're here today. We've got a fantastic lineup of expert panelists, and they're going to help you digest what to expect in 2025 and beyond. We're going to begin our discussion shortly. As we begin our program, I want to encourage you to go ahead and begin eating your lunch and enjoying your salads. This event wouldn't be possible without the support of our sponsors. So before we dig into our discussion, please, I want to welcome our new Chief Growth Officer, Lawrence Cunningham, to introduce today's sponsors. Lawrence leads our business record and DSM sales teams with a customer-first approach, driving strategic growth initiatives, and developing innovative solutions for our readers, advertisers, and community partners. He hit the ground running in October. He's got a ton of big ideas. We're excited to welcome to the team. Please give him a nice warm welcome to the BPC team too, Lawrence Cunningham.
Good morning. I love being introduced as the big idea guy. Big shoes to fill around here, I think. So we're going to hear from our presenting sponsor today. We're honored to have Raymond James as a presenting sponsor. So for nearly 15 years, they've been presenting this event, and they offer investment advice tailored to their clients' individual goals. Their continued support of the economic forecast underscores their dedication to the community's economic growth and prosperity. Please welcome Steve Devaney, Branch Manager, Senior Vice President of Investments at Raymond James.
Hey, welcome. And like he said, 15th or 16th year, wonderful opportunity. Seen several people before the meeting started today that I know. And the Business Record, I think, published their first piece in 1983, which is before half of you guys in this room were even born. But anyhow, great deal for Central Iowa. Business Record is a great organization. And we're thrilled to be the sponsor again. And enjoy the program. We'll be back next year. Thank you.
Our next supporting sponsor is a new sponsor. It's the Iowa Bankers Association. For nearly 140 years, the IBA has been dedicated to serving Iowa banks and providing a strong voice at the state and federal levels. Their support reflects a commitment to empowering the financial services industry and contributing to the success of their members. Please welcome, for the first time formally, the President and CEO, Adam Gregg.
Well, thank you and good morning. My name is Adam Gregg, and I'm very honored to be here in my new capacity as the President and CEO of the Iowa Bankers Association. As I look out in this room, there are so many of you that I got to know in my previous role as the Lieutenant Governor of Iowa, and I'm happy to be able to work with you in this new role. You also probably know my predecessor, John Sorensen, who served in this role for 28 years and served this organization very well, and I'm excited to build on his record of success. Just a little bit quickly about the Iowa Bankers Association. We represent the banking industry here in Iowa, the 266 Iowa banks. It's 266 banks that operate in Iowa, and 226 of those are state-chartered institutions, and we do so through advocacy, marketing, HR, and compliance services. But we're also much more than your typical association. We have two wholly owned subsidiaries. One is a mortgage company, which helps Iowa banks provide mortgages to Iowans all across our state. And we also service well over $9 billion of mortgages across an 11-state territory. We also have an insurance company, Iowa Bankers Insurance and Services. Chad Ellsworth leads that very capably for our team. They manage the Iowa Bankers Benefit Plan, which provides about 20 health insurance for about 20,000 Iowa bankers and their families. They also have a property and casualty line of business, which insures Iowa banks and their property, and also provides lines of business for bank-affiliated insurance agencies to sell. Our sponsorship today, I think, is a natural fit for a lot of reasons, and basically, Iowa banks support every aspect of Iowa's economy in one way or another, whether that's through supporting home ownership, personal loans, supporting Iowa farmers, or helping entrepreneurs start, grow, and operate their businesses. Our tagline is built by you, backed by Iowa banks, and I think that reflects the incredible partnership that we have with Iowans in helping them achieve their goals and their dreams. Very quickly, I want to take this opportunity to mention that, yes, today we're going to talk about, I'm sure, a lot of very good things that are positively impacting our economy. I want to mention one challenge, and it's the most surprising thing that I have seen in my new role as the president and CEO of the Iowa Bankers Association, and that is the extent of fraud that our banks and their customers are dealing with, siphoning funds from the economy and putting it toward illicit purposes. There was a stat that I came across recently which kind of knocked me over. It's from the Aspen Institute and the American Bankers Association and a number of other partners. They found that every day, 57,000 Americans are scammed. It's enough to fill a baseball stadium. And they're scammed of enough money to build that stadium. That's $430 million every day from 57,000 Americans every day. And you better believe that Iowans are being impacted by that. So at the Iowa Bankers Association, we will be rolling out an initiative, an anti-fraud campaign to help educate Iowa consumers and to work with Iowa banks to help stop this challenge and to deal with that and make sure that those funds are put towards positive roles in our economy. So with that, thanks again for being here. Thanks for the opportunity, and I look forward to the conversation. Thanks.
Our next supporting sponsor is Iowa State University. Iowa State's economic development and industry relations connects industry leaders with university resources, fostering collaborations that drive innovation and economic growth across Iowa. Iowa State's support highlights their dedication to advancing the state's economic development. Please welcome David Spalding, Dean of the Ivy College of Business and Vice President of Economic Development and Industry Relations. Dean Spalding.
I think I can hit an 80-footer for those of you who were watching the game last night. Sad, sad ending, but we made the Today Show. So wonderful to be here again, wonderful to be a sponsor of this very interesting and informative event. I'm really looking forward to the panel coming up here. Iowa State has a long-standing tradition of fostering partnerships with industry, with government, with nonprofit organizations to help drive economic growth here in the state of Iowa. We impact Iowa's economy every year in all 99 counties across this state, and we're very proud of our engagement in each one of those communities. We have 5 units in our Economic Development and Industry Relations group who carry out this work. Got members of the senior team here at the table with me. We have the Center for Industrial Research and Service, which is really our engineering outreach organization. We have the Small Business Development Centers engaged all across the state with small businesses, helping them thrive and survive. We have our Iowa State University Research Park. We have the Office of Innovation and Commercialization and the Papa John Center for Entrepreneurship, all dedicated to helping companies grow here throughout our state. Our collaborative efforts have a major impact on the state. Every year we're helping to create thousands of jobs across the state of Iowa. If you take a look at over a period of 5 years, we're adding billions of dollars of impact to the economy here in the state of Iowa through the work of each one of our operations in the Office of Economic Development and Industry Relations. Iowa State University also plays a critical role in workforce development for the state of Iowa. We provide more graduates every year who take jobs in the state of Iowa than any other university in the world. We are the #1 producer of college graduates for each one of your organizations. And we're very proud of the work that we do in the classroom, the experiential learning that we provide our students, so they're prepared to hit the ground running when you hire them into your organization. Another critical area of impact for us is the agricultural sector. Our extension folks, the researchers that we have on campus, engaged in helping to improve productivity and sustainability in the Iowa farm economy, playing a critical role around issues like the bird flu issue. We were the first to discover in our veterinary diagnostic lab the transmission of bird flu from birds to cattle, and we're very much in the forefront of finding cures for these critical problems that face our agriculture, our animal production industry here in the state. So as we look into the future, there are challenges, but there are also opportunities, and we're always here to support Iowa businesses, to help make your community stronger, to help make your businesses stronger. And it's a real honor, again, to be a sponsor of this. We really value our partnership with the Business Record, and looking forward to these great panelists. Thank you.
Our final and longtime supporting sponsor of the Economic Forecast is Security National Bank. Since 1964, this family-owned banking institution has been committed to providing personalized financial services and fostering community growth. Their support underscores dedication to empowering individuals, families, and businesses in our region. Please welcome Lisa Smith-Shrike, Vice President and Director of Trust and Wealth Management.
Well, we're proud to be a sponsor of the Business Record Economic Forecast. For those that may be unfamiliar with Security National Bank of Iowa, we have 3 locations in Iowa. Probably the one that's known the most is right in the Hobby Lobby parking lot on Jordan Creek Parkway. We have locations on both sides of Jordan Creek Parkway. As mentioned, we're a 60-year-old bank, family-owned by the Landon family. We have about $1.8 billion on bank assets with local decision-making. We offer consumer and commercial loans, business banking, and private client services made up of wealth management and investment services, financial planning, trust and estate services, and private banking. In the trust services location, we manage about $2.5 billion. We offer personal trust, special needs trust, conservatorships, farm administration oversight, unique asset management, estate management, and family-owned businesses. Our customers include personal, charitable gifts to foundations, endowments, and other nonprofits, corporate and commercial business. So how do we get to Iowa? The home office is in Omaha. We actually were asked by the Iowa Bar Association to join the Iowa market a little over 10 years ago, and we're very proud of that. We continue to ramp up our presence in Iowa, helping customers with various banking needs. We look forward to the discussions today, given the monumental changes we're incurring now with President Trump, artificial intelligence, and the overall Iowa economy. It is Security National Bank's honor to sponsor the Business Record Economic Forecast.
Can we have one more hand for all the sponsors that help make this event possible? And to all the partners, thank you. We know that resources are finite, and we appreciate that you choose to partner with the Business Record in order to bring great programming like this to our community. The next item on our agenda today is the presentation of the Deloitte CFO of the Year Award. Deloitte provides world-class audit, consulting, and tax advisory services, helping businesses navigate complex challenges and drive growth. Business Record is proud to say that for over a decade, Deloitte has been the presenting sponsor of the CFO of the Year Award. Here to introduce the 2025 Deloitte CFO of the Year is Rick Tewald, Des Moines Marketplace Leader at Deloitte.
Thank you. Good morning, everyone. So as Lawrence just said, I'm Rick Tewald, Marketplace Leader for Deloitte here in Des Moines. And we've been part of this community for several decades now and providing audit, consulting, tax, and advisory services throughout the state of Iowa. We're committed to making an impact that matters and implementing innovative solutions for our clients and our communities. Deloitte has been a longtime supporter of the CFO of the Year Award, as Lawrence said, at least 10 years. We were talking about that earlier, Chris and Lawrence and I. 10, 12, I don't know, we lost count somewhere. It's a pleasure to once again be part of today's event. I always enjoy this day because it's truly an honor to celebrate a CFO who's doing remarkable work within their organization and community. The CFO often operates behind the scenes, yet they're crucial to the success of an organization. The Deloitte CFO of the Year Award serves to honor an individual for their outstanding performance. So hold your applause to the Yanks. I've got a long introduction here, but this year is my pleasure to introduce and invite to the stage the 2025 Deloitte CFO of the Year recipient, Kip Albertson from Bankers Trust. So in an era when job hopping, or in some cases dropping out of the workforce, has become commonplace, Kip Albertson is an anomaly. He joined Bankers Trust as Chief Financial Officer in 1993 and has remained in that role for 31 years, with only his pending retirement as an endpoint. Over that time, Kip has had a major impact on the organization. During his tenure, the bank's assets have grown from $460 million to $7 billion, with much of the most substantial growth occurring over the last decade. In 2009, he helped lead the formation of BTC Capital Management, the bank's registered investment advisory, where he serves on the board as secretary and treasurer. In 2024, he was promoted to Executive Vice President of BTC Financial Corporation, Bankers Trust Holding Company, and has served as CFO of BTC Trust Company of South Dakota since 1993. Kip's financial leadership put Bankers Trust in a strong position to endure the COVID-19 pandemic in 2020. The bank handled the highest volume of Paycheck Protection Program loans of any bank in Iowa, issuing 1,500 loans for $403 million. His work has also ensured Bankers Trust can consistently donate $1 million to local nonprofits in communities it serves. Bankers Trust and CEO Don Coffin wrote of Kip, "Kip will be the first person to tell you that the success of this organization is due to the employees who serve our customers each day, going above and beyond to meet their products and service needs. What he won't tell you is the invaluable role that he has played in Bankers Trust history and the accomplishments that would not have been reached without his leadership and expertise." So today, in conjunction with the Business Record, Deloitte is proud to recognize Kip Albertson as the 2025 CFO of the Year. Congratulations, Kip. It's well deserved.
Thank you, Rick. I just had a few thank yous I'd like to offer today. First is to Don Coffin and to Emily Abbas for nominating me. Emily couldn't be here today, was here because she worked really hard on the nomination and did a great job, so a big thank you to Emily. I also want to thank Richard Hurd, Jeff Cannon, Nick Henderson, and Rob Kreisinger for their very flattering letters of support. I'd like to thank the Ruan family from all of us for being such fantastic owners of the bank and being so philanthropic to not only Des Moines, but all of the communities that we serve. I have a big thank you to the hundreds of employees that I've had a chance to work with at Bankers Trust over 31 years. There's a table over here, and we have Rick, Dennis, Chris, Clint, CJ, and Susie, and those folks are extraordinarily good at what they do. I owe them a deep debt of gratitude and thanks. I owe a big thank you to the customers of Bankers Trust. We have many customers of Bankers Trust that have been with us for decades, not 10 years, but 40 or 50 years. Their growth and success has really been a significant contributor to the growth and success of Bankers Trust. Also, when I think of us, all of us here in the room today, how fortunate are we to be able to live, work, and raise our families in a place like Des Moines, Iowa? When you think of what's going on in the world, I can't think of any place else that I'd rather be than right here in the state of Iowa. I want to thank my wife, Debi, for everything she's done for me for really 46 years of my career. Thanks for everything. We've been together over 50 years. And I'd like to thank Deloitte for this recognition and really for a spotlight on the profession. The world needs more finance and accounting people. I think it's a good profession. It's been great to me and our family, and these other folks I have here today, I think, are an attestation to that. A big thank you to the Business Record for sponsoring the event today, as well as the other 4 sponsors. So thank you very much. This really means a lot.
Well, thanks again, Kip, for your commitment, not only to Bankers Trust, our community, to your wife as well. It's no wonder you're the CFO of the Year award winner this year. Congratulations again. Let's give Kip one more big round of applause. All right, we're ready to jump into our discussion, so I'll ask our panelists to come on up to the stage. And you know what? Let's warm them up a little bit. Can you give them a big round of applause as well? Let's get them ready to go. They've got the easy task today of trying to make some sense of what's going on out there in the economy and in the world. I think maybe in the last few minutes, another 10 to 15 executive orders have been filed. So I assume you guys are all ready for that, right? We've got no shortage of topics to talk about. Some years, when I'm preparing for economic forecasts, we really have to kind of go deep into some topics. I get really into things like quantitative easing and Fed policy and a whole bunch of things because I'm trying to figure out things that I think you all would be interested in. This year, I think I have a pretty easy job. My list of questions is long. We won't have time to get to all of them, but I'm excited for us to go ahead and dive into some of the critical topics that we'll be discussing today. We've got a fantastic group of panelists, and there's no way we've never gone back and tried to make sure that the things that they tell you actually come true. We won't hold this group to that either, but we do appreciate that they're taking their time and energy to help us best understand what's coming forward. I like to operate in the gray area. That's the type of place that I think we're at our best, when we're helping you understand the things that don't have a definitive yes or no answer to them. Dealing with uncertainty and the change that we're all experiencing and trying to navigate as businesses. That's what we're here to do today, and I'm excited to get started. So with us today, I'm going to introduce our panelists. First off, we have Jon Augustine. He's the Chief Investment Officer at BTC Capital Management. Next, we have Michael Cornett. He's the Managing Director for Forvis Mazars, Washington Tax Office. A little bit about Mike. He's not from this community, but he's got more than 40 years of experience in federal taxation. He speaks frequently on tax issues and has published several articles for national tax journals. Our friends at Forvis Mazars help with the connection, and he's flown in to be with us today. So let's give him a warm welcome from Des Moines. Next, we have Debi Durham. She's the Executive Director at Iowa Economic Development Authority and the Iowa Finance Authority. Christopher Pudenz, he's the Economics and Research Manager for the Iowa Farm Bureau Federation. And lastly, we have Deanna Strable, the new President and CEO at Principal Financial Group. Let's give them one more big round of applause. All right, we're going to start out with a question to just get a little bit of a gauge on how our panelists are feeling about the economy. We're going to have you each answer the following multiple choice question. In 2025, do you think the Iowa economy will A, improve dramatically, B, improve slightly, C, remain about the same, D, regress slightly, or E, regress dramatically? And Jon, you drew the straw with the A name to go first, so you're up.
Okay, thank you. Really, I think the economy here in Iowa will probably stay about the same for 2025. I think there are some very positive things going on in the state, but being offset by some weakness, particularly in the area of agriculture. I think we've all seen announcements from manufacturers of ag equipment that have been announcing layoffs, et cetera, and obviously there is a ripple effect that goes through the economy in terms of how that impacts other businesses, suppliers, et cetera, within those communities. So I think there's a bit of an offset there, but I do think there's some positive aspects of the economy too, so I'm expecting to be just about the same for 2025 as in 2024.
All right, thank you, Jon. Michael, we won't pin you to Iowa, but if you want to give a general statement about the economy, we'll go from there.
Yeah, I think the economy will be slightly better, and I guess I'm optimistic that part of that's going to be because they will get some tax reform done this year, maybe later in the year, but if they do some of the things they're talking about, I think that could certainly have a positive impact on it. You know, tariffs are certainly going to be a wild card here on the economy. Whether they're going to be a negotiating tool, which seems to be what the president wants to do, or whether they're going to come to reality, we'll have to see.
All right, Debbie, I'm going to ask all the panelists, go ahead and bring your mics right up nice and close. That way everybody can hear you great. Perfect. Debbie?
Actually, I struggled with this question this year for the very first time. I did say improve slightly, and there's a lot of good reasons for that. We're starting to see labor participation recover. Population is growing in Iowa. We think we're seeing non-durable goods, manufacturers that's bottomed out. The USDA, World Agricultural Supply and Demand estimates are bullish. And there's an incredible amount of optimism about making the tax cuts permanent and regulatory reform. And 46% of Iowa businesses surveyed plan to expand in the next 3 years. However, when you think about dismantling the federal bureaucracy, tariffs, whether they're negotiation or they're going to replace income tax, and mass deportation, these are all extremely disruptive factors in the economy. And though supportive of those, it's certainly going to be some pain in the short term. So it depends on is growth going to truly balance that. But I'm always bullish on the Iowa economy, so I said improve slightly.
I would have been alarmed if you had gone with neutral even. So.
Yes, you would have been.
All right, Chris.
Good morning, everyone. My name is Christopher Pudenz. I'm the economist at the Iowa Farm Bureau. As a farm kid who grew up on a cattle farm in Carroll County, I'm very honored to be seated here today representing the Iowa ag community with such distinguished guests. So thank you for that opportunity. I am going to say that focusing on the ag economy specifically, I expect things to regress slightly in 2025. I think that there has been a lot of bleeding in the ag economy here in Iowa, and I think that has slowed down, but I don't think it has stopped yet. So we'll unpack more about that as we go forward. But there's a saying that when the American economy sneezes, the rest of the world catches a cold. In Iowa, I would adapt it and say that when agriculture sneezes, the rest of Iowa catches a cold. And agriculture is definitely sneezing quite a bit right now. So we'll talk more about that as we go today. Thank you.
I'm not sure that I like the pandemic references, but I'm still a little gun shy about the 2020 economic forecast. I didn't ask about something called coronavirus. So anyway, Deanna.
Yep. So first of all, thanks for having me today. I am 3 weeks in to my job as new CEO and principal, but 7 years as CFO. So congratulations, Kip, on CFO of the Year. It is a great profession, and you should be honored for the award there. So, I tend to be a glass half full person. So I actually think that the Iowa economy will improve slightly. But sitting here with the amount of volatility that I think we're going to have, I think the margin of error relative to any of our predictions is probably wider than most of the years. But I think we do have a resilient economy, and I think the underpinnings of both Iowa and the national economy is showing lines of positivity. And I think things like deregulation and tax policy could provide some stimulus as well.
Well, I'm glad that we got some regression analysis type things going on here, Deanna, from our CFO. So I appreciate that. The margin of error, I think, is really interesting. The next question we're going to talk about is our most recent economic outlook survey, which some of you might have taken as well. We asked that same question on the scale 1 through 5. This year, there was a perfect split. 41% of respondents were on the side of improve slightly or improve dramatically. 41% were on the side of regress slightly or regress dramatically. And then there were 16% of you that took Jon's position of the neutral route to go as well. So, that split in optimism, I think, was the first time I've really seen that. Usually we'll all hedge one way or the other. This year, with those wide ranges, I think that's really interesting. And Deanna, we had a chance to talk before the panel, and I wonder if maybe you might address what you're kind of seeing in that optimism split.
Yeah, so one of the research things that we do a lot of times during the year is the Principal Wellbeing Index, where we're going out to employers and individuals around the U.S. and ask a lot of questions on how they feel regarding confidence. And we saw something similar. And the thing that we have seen throughout 24 and even into 25 is confidence around the things that they can control, but less confidence as it gets farther away from them. So just a few stats here. 65% of business owners were positive, but when they were asked about local and U.S. economies, we saw a double-digit drop in confidence, even from November to January. So local confidence went from 50% to 38%, and U.S. confidence went from 40 to 26%. And so, but again, very confident about their business and how they could drive growth there. I think we've mentioned the drivers there. I think there is so much uncertainty. And then if you also lay on the volatility in the markets that we saw at the end of 24 and the beginning part of 25, both market-wise and interest rate, I think that just leads to a lot of uncertainty. And with uncertainty, it does impact your confidence and your ability to predict what's going to happen.
Rest of the panel, anybody else want to chime in on that, the optimism split there? What factors do you think might be leading to some of the optimism?
I think from an optimism perspective, the trends that we see from labor and growth, so business growth and labor, even though there's a little bit of flattening, are still positive. So I think underlying business fundamentals and business growth expectations are strong. It's just, again, if you actually think about the uncertainty and the volatility, I think that's leading to some mutation of some of that confidence.
Jon, I wonder if you might be able to translate that to when you think about the markets and think about the broader economy with that uncertainty, what effect can that have, and what do you think is, how is it responding right now to that?
Well, I think you've seen the responses to some degree, and it was just mentioned in terms of the market movements that we've seen in terms of interest rates, up, down, et cetera. The equity markets, certainly yesterday was an interesting one, to say the least. But I think that's what comes out of this environment as we try to understand, anticipate some of the things that may be approaching and hitting the economy in regard to regulatory changes, in regard to immigration changes, et cetera. It does mean you have to have a wide array of potential outcomes as you take a look. You know, we have a base case in terms of our expectations on what we think the economy will do, on what we think markets will do, but we also understand we have to be prepared to pivot that outlook based on certain outcomes that could be coming as we move forward into the year. There's a quote from Dwight Eisenhower that I always like, is that the plan is useless, but planning is indispensable. So like I said, we have a base case in terms of our expectations, but we are prepared to adjust that as needed as we see things unfold throughout the year.
Deanna, and forgive me if you don't have this information, but you had mentioned that you'd done something pre-election and post-election. Any other interesting things that you found in that?
I don't think there was anything other than really what we saw there, which was the level of confidence on the broader economic cycle went down so much. That was really the big piece there. And then the other thing I think relative to labor, when I think employers are more in the maintain range rather than growth, again, likely because of that uncertainty. So that's also very industry specific and locale specific, but I'd say that's the other trend that we saw. Our actual numbers would support that as well.
Yeah, and that's certainly what we're seeing, large capital investments being made, but really no job maintaining, a lot of, keeping status quo on the job side. Again, showing a couple of months of some increased numbers in labor participation, which is encouraging. And as I stated earlier, seeing some population growth, because as I've said over and over, that is our largest challenge here in Iowa, is a population problem. So that's been encouraging to see as well. So really bullish more on the state. It's really that when you lay it against the backdrop of what's happening on the federal, and people are optimistic about the policy changes they're hearing about, it's just how does that really play out in real time?
Well, I think that's probably a good segue into that. So I think on day one, President Trump signed more executive orders than the last 10 presidents combined on day one. There's a number of proposed policy and executive orders in regards to tariffs, tax policy, energy, immigration policy that, depending on your position, either have folks concerned or optimistic about what the effects will be. That's a lot, and I'm curious what federal policy changes you're most closely watching, and maybe Debbie, I'll start with you from the economic development standpoint.
Well, certainly today we're watching because of the very cryptic memo that went out that we're stopping all federal funds flowing. So it has created a panic in the broader marketplace with very little details of what any of that means. There is a call the governor's office is having with the White House today, so we'll probably get direction. If I had to guess, it's probably very narrow in scope, but you wouldn't get that by basically the release coming forward. I will tell you though, when I look at that broader optimism, I think part of it is really relief. I mean, taxes are one thing, but for us, the relief on the regulatory side, I think, is more encouraging. So I'm going to give you an example. You know, we were asked by the governor to basically, it was like an incredible therapy session for our team, right? Because it's like, what if you could change these programs and actually deliver service to the people you're called to serve? And housing is one of those areas that the cost of housing for affordable housing is really not affordable at all because a lot of it is the regulatory burden that we carry. I'll give you just an example. We work with HUD, all different kinds of funding with HUD, or then you throw in USDA and other state or federal agencies. They all require these environmental reviews, but none of them talk to each other, and they're not accepted by anyone. So you think of the cost of a project having to do multiple environmental reviews, right? The time that has was money. And so those are some of the things. So for us, really looking at that regulatory side is the part that has us, quite frankly, really the most encouraged. As far as the tariffs, I think it's really more of a negotiating tactic, so we don't get too bent out of shape on that. The ag people may have something else to say about that. But for us, most of our trade comes from Canada and Mexico. I think part of the posturing for him is wanting to, reopen the trade agreement that expires in 2026. I think he does everything in the public when he negotiates, so he shows his hand to a certain degree. So I think there's some posturing going on there. But for us, it's really on that regulatory side that we're paying most attention.
Yeah, and I would just kind of add on the regulatory side. I mean, there was the presidential order to obviously freeze proposed regulations that haven't been published. The other thing that hasn't really been talked about is the Congressional Review Act, which Congress has the authority to actually pull regulations back that have been finalized. So we'll get to see how much they enact that. That can go back to August of last year is what they're saying. So regulations that were finalized last August could be subject to the Congressional Review Act. So we'll see what they choose to do. Trump's first time around, they did it, I think, 16 times. In his first time around, so we'll see what happens there. And that's not just tax, that can be any type of regulation that's out there. The problem, if it's out there, they don't use that, then they have to use what they call the Administrative Procedures Act, which is a time-consuming process, but again, that is a way to pull regulations back that have been finalized. So we'll have to see how they use those two tools going forward.
Chris, anything that you're looking at specifically?
Yeah, to Debbie's point about tariffs, the thing with tariffs is there are no new tariffs yet. And every single one of those words really matters, right? The yet word really matters, but also new matters. We're still dealing with some tariffs from the first Trump administration that the previous administration didn't make much progress on. Should the administration choose to proceed with tariffs, and who knows, your guess is as good as mine. I've been up here for about 15 minutes, and there could be tariffs that have been announced that I haven't seen. But it is typical for our major trading partners to respond by targeting agriculture specifically. Canada is known for being very, very targeted and picking off specific products from specific states. So that's something that certainly makes agriculture a little uncomfortable anytime tariffs are part of the conversation. I will say that in the last week, I've met with trade delegations from two different main allies of the United States, and certainly tariffs were part of the conversation, but those were productive conversations. Hopefully things don't escalate in those relationships. But to Debbie's point, I really do think that this Colombia example that we saw over the weekend is very demonstrative of how the president views tariffs. So for those who might not pay as closely as attention to this type of thing as I might, I woke up Sunday morning, having done most of my prep for this event already, and I woke up Sunday morning and there was an announcement that President Trump had put 25% tariffs on all goods from Colombia coming into the United States because the Colombian president had turned away 2 flights of deportees. In response to that, the Colombian president said, well, we're going to add a tariff as well. I went to bed Sunday night thinking that I was going to have to revise my notes for this luncheon today. Woke up Monday morning and it was all taken care of, right? The dust had settled, Trump had got the wins that he'd wanted, no tariffs, and on to the next thing. So putting this all together, I do think Trump is dead serious about tariffs, but I don't think he loves tariffs for the sake of tariffs. And one final point, should we get caught up in a trade war, Secretary of Ag nominee Brooke Rollins said during her confirmation hearing last week that they intend to use similar aid policies like MFP and things like that, like they did in the first Trump administration.
Which was encouraging.
Which was encouraging.
Yeah, very encouraging.
Chris, I wonder if you could help us, for those of us, me, that are not experts on tariffs and how they ultimately affect our ag industry and our economy here. Maybe help just translate that through and what that could be and what the effect could be if there's, and what the concern is ultimately.
So the concern is related to the fact that the state of Iowa is a very, very productive agricultural state. The good Lord has blessed us with very fertile, resilient soil, so we can produce large crops of corn, soybeans, feed those things to livestock year after year after year. So we have more production than we can consume here in the state, which means that we export quite a bit of our production. The United States exports a lot of soybeans, a lot of corn, a lot of pork, a lot of beef. Iowa ranks first in 3 of those 4 products in terms of value of product exported. And so the concern is that if a trade war were to unfold, that will impact the prices for those commodities. And then how does that come back to the farm gate here in our state? And then, how does that sort of spread throughout the rest of the economy, to the machinery manufacturers, to main streets, to banks, stores, coffee shops, things like that.
But also, don't you agree, though, Chris, that if he can help open new markets, right, and kind of balance some trade agreements that have not been balanced over the years, that could actually be some growth opportunities there?
Oh, absolutely.
Yeah.
The UK was chomping at the bit for a trade deal for the last 4 years, and we weren't playing ball on our side of things.
Yeah.
Now the UK has a new prime minister. He wants a trade deal. We have an administration that is friendly toward trade deals. That's low-hanging fruit right there.
Correct.
John, from the standpoint of looking at the markets again, I'm curious, everybody had the anticipation that something would happen and nothing has quite yet, besides the examples that Chris is sharing. I'm curious, is that already priced in, or are people, what's the reaction going to be?
It's hard to say because we don't have any hard and fast data. I mean, it's all, a collection of statements and some reactions to it. We don't have anything concrete right now. I have seen estimates in terms of tariffs and the impact they could have on the economy in terms of GDP this year, and the estimate I saw was perhaps 1%. So a meaningful but not yet really significant compared to the anticipated growth we have for the economy, which is 2 to 2.5% in terms of real GDP growth. So 1% would be impactful, but not catastrophic. And of course, that's very fluid because we don't have any idea right at this moment in time what exactly those tariffs, if they are enacted, would lead to in terms of the impact on the economy.
Deanna, from a CEO's perspective of a large global company, what are you looking at and trying to be prepared for as well?
Yeah, both from a company perspective, but also as we deal with our investors. There's hundreds and hundreds of things that are happening, but you can really kind of bucket them in probably 5 different categories. Many of them we've talked about. Trade, we've talked about. Obviously, depending on where that goes, it could have a positive or a negative impact on growth, inflation, and interest rates. And so there will obviously be some second and third order impacts of that. Immigration is one we haven't talked about, but I think that's another bucket that, depending on the specifics of your industry, can be very impactful. Deregulation, I think, ultimately is a positive from a business confidence perspective. Fed independence is another category that we're watching. Obviously, interest rates is impactful to every economy. We do think they're going to stay a little more resilient, but obviously if they went down, if Trump would do anything that would impact the independence of the Fed, I think all bets are off on what's going to happen relative to interest rate policy. And then tax policy, I do think that one is probably a more uphill battle to get significant changes in tax policy. It'll probably be more in the latter part of the year. But those are the 5 areas we're really watching, some that have more direct impact on us, but others that have impact on our customers.
Deanna, if you were giving advice, and just in terms of navigating when there is lots of change coming for other business owners, what maybe advice would you provide?
Yeah, I think it's come up earlier, right? You have to have your base case kind of expectations, but also understand the volatility around those, the different scenarios, and how you would pivot if things did go down a path that was different than what you expect. That's really what you have to do, and then stay focused on the long term and control what you can control, and not overly worry about the things that you can't control, and ultimately plan for the long-term success.
Michael, from a Washington perspective, you've been in Washington a long time and interacted in that space. What's been the general approach of folks maybe that you're interacting with?
Yeah, general approach is, right now there's, I hate to say a lot of uncertainty, but I mean, there definitely is. I mean, there was a lot of promises made on campaign trails about tax, no tax on tips, no tax on overtime. The issue that you have to deal with is how do you pay for these tax savings, particularly since they're going to have to more than likely result in using what they call the budget reconciliation process, which means the Republicans are going it alone on some of this, even though there has been some indication, some Democrats at least on the surface said they'd be interested in some tax reform. I think the key is the one thing that I think almost can say with certainty probably will happen is, at the end of 2025, parts of the tax law that came in 2017 expire. And no one wants to see those provisions expire. So I think you will see something happen, whether I don't think it's the next 2 months, 3 months, like the Republicans have said they would like to have happen. It's probably, as what was said, more towards the end of the year. I think that it could happen, but I think you will see at least something happen on those expiring provisions, which are important to, I think, everyone in this room, because it's individual tax rates, it's pass-through deduction for small businesses. There's probably going to be some business fixes in there potentially as well, but that'll happen. I don't think there's going to be any doubt, because no one wants to be on the hook for saying taxes went up under my watch. The question will be whether it is just a temporary, again, let's extend it for 4 more years, leave it for the next administration after Trump, or whether they will somehow find the cost to be able to pay for it to make it permanent. And that's going to be it. And, that's part of that budget reconciliation process that you'll start to see next week. The Republicans down in Miami who were there, of the 220 House members, or I guess 219, 218, however you want to count it, only 170 actually showed up for the meeting down in Florida. So there's going to be a lot of consternation as this process kicks off. But, look for really in the next couple of weeks, if they're able to do it, what their top line number is, what they're willing to spend. And that's just not tax. It's, that'll include border, that'll include energy. That's going to be what you're going to see happen in Washington.
Chris, I want to go back to you on the ag economy and manufacturing a little bit. You helped in your response in the business record. You said accounting for associated ripple effects and Iowa Farm Bureau analysis estimated $1.5 billion reduction in GDP from the 2024 layoffs, and that was as of September 16th. Help us understand a little bit more about what's leading to that, and then Debbie, I'll just get you teed up to see what you're seeing going forward.
Thank you for that question, Chris. So fundamentally, what led to that estimated $1.5 billion hit to GDP were depressed incomes at the farm gate. Like I said in my opening, when agriculture sneezes, the rest of the Iowa economy catches a cold. That is because, according to a study by the Coalition to Support Iowa Farmers, 1 in 5 jobs in Iowa is in an ag or ag-related industry. And so agriculture is a really, really important part of this economy, but so is the whole ecosystem of businesses, some of which are represented here today, that support agriculture and exist in a symbiotic relationship with agriculture. For example, John Deere, Kinsey, Vermeer, others, all are located in the state of Iowa because agriculture is here. And those businesses all have their own network of businesses supporting them. Firestone in Des Moines is a good example, lots of others. And those folks turn around and spend money in their communities, like I said, on their main streets and things like that. So when farm incomes are depressed due to lower commodity prices, for a variety of reasons, but corn prices are lower than they were and soybean prices are lower than they were, and the hog industry just went through a generational downturn. Really, really difficult times for the hog producers in our state, and we're the #1 hog producing state in the country by far. So really has impacted the ag economy, and that has those ripple effects throughout. So that's how you get from roughly 4,100 jobs as of September, now it's like roughly 4,700 jobs lost in the ag and ag adjacent industries reported to the Warren system. That balloons into that $1.5 billion hit.
Debbie, what are you seeing as far as talking to manufacturers and what they're trying to do at this point?
Well, I mean, certainly you're right, because probably that sector in Iowa that is direct line of sight to the ag is manufacturing, as you said, and we follow the Warren notices very closely. And since really January of 2024 to date, we've had over 7,000 permanent layoffs, and over 5,000 of those have been in that manufacturing, and again, line of sight directly to the ag economy. The good news is, though, that we are seeing some strengths and like I said, improvement in the non-durable goods and manufacturing, and you're seeing some major capital investments in manufacturing, and so there's still some bright spots out there. But yeah, until the ag calms down or levels out, you're going to probably continue to see some Warren notices with some of those supply chain manufacturers out there.
I'm going to switch gears a little bit and talk a little bit about the Federal Reserve. Officials cut interest rates as expected last month by a quarter point, but minutes from their December meeting suggest the decision was a pretty close call. There's no guarantee policymakers are going to lower rates. The next meeting is either tomorrow or it's the 29th. So Fed officials said the possibility for the policy changes that we've been talking about, plus the risk of elevated inflation has increased. So John, I want you to tell us what are they going to do next? I'm just kidding.
Well, for the meeting tomorrow, the expectation is they won't do anything. It's virtually a zero probability that they will cut rates tomorrow. As of right now, financial markets are looking at potentially 2 cuts, 25 basis cuts throughout the year. The first one right now, in terms of projections, would be in May, with a second potentially coming in September. And the expectation is that as we move forward through 2025, the Fed will be looking at more, they always use the term data dependency, but even more so as they go forward. You know, they've made these 3 cuts in 2024, the 50 basis points in September, and then the 2 following cuts with November and December. But the expectation is they'll be watching things very closely in terms of, we won't be cutting just for the sake of cutting in any way, shape, or form. There'll be a definite rationale behind it. So that's what we're looking for. And I think that's one of the things we're anticipating as we go through this year, is that we will probably see interest rates stay higher for longer, even with those cuts that may be coming in May and September.
Deanna, you mentioned that you're watching that as well. What are you considering in that space? And I won't make you tell us what you think is going to happen, but what are you looking for in the possible effects?
Yeah, I would say that our economists would be pretty aligned with what John said. I think maybe 3 cuts, but probably not until, later in the year will that start. And I do think tariffs, if any of those come to fruition, could have a much more dampening of those cuts. And ultimately, I think we believe that we will stay higher for longer. Still low relative to where we were decades ago, but I don't think we'll see the dramatic drop in interest rates. But we'll be watching the labor market and then the tariffs that could come about as well.
We've talked, Deanna, you did a great job of listing the 5 kind of broad areas of some of the executive notifications. And so one that we haven't talked about is immigration, so I want to spend some time on that. 6 of President Trump's initial wave of executive orders and more since have been focused on limiting immigration, including stricter immigration laws, an enhanced vetting process for visa applicants, and declaring a national border emergency at the southern border. A recent study was cited that noted undocumented workers are estimated to be about 7.2%, or 9 million workers of the U.S. workforce. And some projections have net immigration decreasing from 3.3 million in the most recent year to less than 500,000. So obviously from a workforce status standpoint, I'm just curious, Debbie, how you're anticipating and thinking about that from a workforce development standpoint.
So can I take a pass on this question? Okay, so here is the correct answer. It should have minimal impact in the Iowa economy because all of our employers are documenting their workers. So, I mean, that's reality, right? Certainly with some of the population growth that we have had, and some of that is immigration, but that's legal immigration that we're capturing in those numbers. So Chris, I guess it's anyone's guess of what that's going to look like.
I know the same study said, obviously Iowa is an agricultural state, and Chris, I'm not sure if you've looked at any of this through this lens and what the effect could be in the ag economy.
Yes. So something to understand about agriculture labor in the state of Iowa is because, I mentioned earlier that we have that highly productive, highly resilient soil. Agriculture is highly mechanized. That's why we have these machinery manufacturers here in the state. So Iowa, on the agriculture labor side of things, is in a very different category than Texas, Florida, California, Georgia, North Carolina. And I think that there are 5 states, let me make sure I get them right, Florida, California, Georgia, North Carolina, and Washington, that together accounted for 50% of H-2A certifications in fiscal year 24. Iowa accounted for 1.5% of H-2A certifications in fiscal year 2024. So, obviously labor is an issue with consequence for everybody on the stage and everybody in the audience, and those things are important to realize, and any sort of policy that exacerbates tightness in the labor market will have impacts for everyone. But on the ag side, Iowa's just in a different category than those other states I mentioned.
And we do really believe it's going to have a greater impact on the coasts, quite frankly, than it is in a place like Iowa.
Anybody else want to take a crack?
No.
It's not tax-oriented, so
yeah, let's see the backpedaling, right. I do want to talk about labor, and Debbie, I know that labor is a huge component of what you all are working on and looking at population as well. Let me get a little bit of background for everybody here. Iowa's labor force participation rate rose, and so you mentioned that we have seen that on the increase to 66.4% of the population in Iowa in December. That was from November. The state's unemployment rate increased slightly, but just to 3.2. The U.S. unemployment rate is at 4.1%. However, labor participation is still down 1.1% from December 2023. Debbie, just maybe talk a little bit about what you're seeing with the participation rate and some of the things you guys are working on.
Yeah, so we certainly haven't recovered since COVID because our labor participation rate was 70.3% going into COVID, which is the second highest in the country. And we talked about those populations that really exited the workforce back then. You saw a mass exodus of retirees that left. We have not fully seen that number come back. In fact, it was interesting. I came home one day and my husband said, "Did you know we got rid of taxation on retirement?" And I said, "Yes, and why is that?" I said, "Yes, I was there, Joel. It's part of economic development." I said, "But," so I've had a front row seat to that. And I said, "Why does that matter?" And he said, "Well, because I just called our financial advisor and I'm retiring next month." month. So, so he left the labor market at a pretty young age. So yeah, so we have not seen that group fully come back, which is part of it. Of course, women left in record numbers, and again, not surprising when you had 33% of daycares closed and online education. Most of that population have come back. But you still have missing, and this is not just Iowa, that has not fully covered, and this is a national trend of those young men 24 to 35 that still have not fully come back to the labor market. So we have growth to really bring those people back in to the labor market, but at the same time, again, we have to grow Iowa's population. And so we've embarked on a really strategic four-pronged approach to growing Iowa's population and recruiting talent. It's a talent attraction program. And I have to say, Chris, it's exceeded, we launched it in June. It's based on research. It's very targeted. We're really targeting those demographics of 30-year-olds, 40-year-olds, and 20-year-olds. And, it's exceeded all of our expectations. Since we launched, we've had about 6,000 leads, and some of those are now going to active leads, meaning about 1,000 plus of people that we are actually in contact with who are capturing information. We're also going to start a project with the Technology Association of Iowa. They used to have this project called the Iowan Project, which is kind of like our ambassadors abroad. We're going to reignite that with them. And then we're going to start doing some hostings out in some marketplaces where we know where they're moving from. They don't feel safe. The research is showed in places like Chicago and even Minneapolis. Things have changed and they want to live bigger. Iowa's #1 from millennial homes. Affordability is the #1 issue of people moving. So we're taking all the information we have, we're doing it in really strategic marketing. We're going in to those places in the country where we know population's coming from. California being the #1 we've received more people from California in the last 2 years, and we know exactly the counties in California where they're coming, so we're doing that wraparound service. And we've had to date 5 people who have actually relocated to Iowa based on this effort. So we're making a difference. And so I think it's moving the needle. And then, of course, again, when you couple it with our tax climate here and how bullish people are on the Iowa economy, we make a pretty strong value proposition for folks.
Deanna, I know you obviously work with a lot of employers. Maybe let us know what you're kind of seeing from the labor standpoint.
Yeah, so across the U.S., we have about 200,000 employer customers. They tend to skew toward the small or medium size, but we have employer customers of all sizes. We did see growth, employment growth in 2024 at about 2%, which was about stable with what we saw in 2023. We did see greater growth in employers of less than 500 lives, and actually flattish if you actually went to more of the larger. What you tend to find, that tends to happen. Larger companies grow and then retract, whereas small and medium-sized companies try to be more stable with their employment. But interestingly, underneath that, 40% of customers increased their labor force, 40% decreased their labor force. So even though on average it ended up about the same, you do have a lot of discrepancy based on the type of employer, the size of the employee, the location of the employer. And really the other thing we did see from our well-being index is that the concern around retaining employees has went down a lot. And it's just the competitive nature of the labor market. Obviously, tech firms are hiring less, laying off, but concerns was as high as 50 at the middle of last year, and it's now down to 30%. And so I think that has shifted a little bit from an employee led market to more of an employer-led market. And really the resiliency of the small and medium-sized business has shown through every cycle, and what we can do to support those businesses is really going to be the fair weather of the economy.
Yeah, the playing field's definitely changed. It is definitely more of the employer right now, which is why you're seeing people say we will be back in the office, and that trend is really getting stronger across all sectors.
You mentioned tech firms, and so John, I'm going to ask you to talk a little bit about the stock market and what we're seeing. So I'll give a little bit of context and then tee it up to you here. The S&P 500 in 2024 had its second straight year of 20% or better returns, bringing the total gain since the bull market began in October 2022 to 70%. So hopefully you didn't pull your money out of the market at that point, right?
Right.
Yes. Okay. Furthermore, the S&P 500 has posted above average returns in 6 of the last 8 years. Markets yesterday hit a bit of a bump, but of course now they're back. Well, at least when I came up here, they were back up again. And that was partially due to the China-based DeepSeek, which released a free AI assistant that uses cheaper chips and takes less computing power. That seemed to trigger worries about future investments that have been made in the space. In fact, NVIDIA, a leader in AI chip market, fell 17% and wiped away $593 billion from its market value, a record one-day loss for any company. So that's a lot. A lot of swinging back and forth, but maybe share a little bit about what's driving yesterday's news, and then I think how we might connect that back to Iowa here too.
Okay, I think in terms of what we saw yesterday, in terms of the reaction from some of the largest tech companies, particularly like NVIDIA that was mentioned, is the realization is to some degree these companies have, from their stock price perspective, been priced for perfection. There's a lot of expectations in terms of their future growth and the anticipation of the products that will be coming out. And so that gets priced into their valuations. And when you see something like the announcement in regard to an alternative that is potentially cheaper, that creates questions in investors' mind of, okay, we've put extremely positive valuations on these companies. Do we need to go in and revalue them? So I think it's very early in that process. I think one of the things that comes out of this is it doesn't slow the integration and utilization of these types of products and services. It may mean that their sourcing may be differentiated, the costs associated with it may be differentiated, but it won't slow the integration of these into our business practices, our manufacturing processes, et cetera, going forward. So in terms of what it means for the market, as you mentioned, we are seeing some of those companies rebound in terms of their stock prices today. So I think we're in a process now of trying to digest what exactly does this mean for the future of these companies who are manufacturing the hardware that is going to be utilized, but in terms of the people that are going to be utilizing it in their businesses to help increase their productivity, et cetera, I don't think that changes based on what we saw yesterday.
Debbie, I wonder if you might be able to connect it back a little bit here to Iowa, the data centers and the power that is needed for that. Maybe talk a little bit about, I know there's been some talk about some additional investments in that area, and just curious what you're thinking about it when you're thinking about AI.
Well, I mean, when you think about AI, the biggest question that we all struggle with, and the same thing within continued growth in data centers of any kind, is the utility infrastructure that we have and the demands that creates on that. Because what we're going to have is stronger base load, right? So when you hear whether it's natural gas, I mean, you're even have Trump talking about coal coming back in some cases, because I think natural gas has to be that insurance policy with all these renewables right now. And then, of course, nuclear. And though we know that there's a long ramp-up time for that to happen, I think that's very interesting. It's also interesting, I listened to some of the president's remarks at Davos, and I see my friend Catherine back there. Of course, he's very provocative when he speaks, but, it's like we're going to do it by just letting them generate their own power behind all of these, data centers and AI centers. Well, in a regulated state like Iowa, that's not really an option. And so, yeah, there are definitely some concerns about that.
I know wind energy has come into focus in that space. Curiosity about some of the rhetoric around wind energy and not being positive, and we obviously are a large wind-producing state.
Well, we're a huge investor in wind. And honestly, the whole renewable portfolio we've had, this wasn't something new for us. We've been on this journey for a very long time. It is a calling card that we can still fuel a production economy on renewables, do it in a reliable way and an affordable way. But again, it does not underestimate, the importance of having base load. I was one that was very critical when we shut down Duane Arnold, right? So now they're talking about bringing Duane Arnold back online. I thought we should have treated it maybe like a stranded asset. I thought that was a really big mistake to do that. But we do need to increase the base load, particularly as we're going to do all this AI computing power. Now, according to what came out yesterday, maybe it's not going to be as necessary, depending on the technology that they have, or we're still going to need the infrastructure. But you just think about the grid not being resilient when you look at the MISO for what the next tranches of MISO. You're probably talking a cost to build out of $5 billion on transmission lines, for those 2 tranches. It's something we need to do. And then, of course, we balance that at IEDA that, we're also seeing some really big manufacturing projects. We're looking at a manufacturing project right now that's $4.5 billion and 14,000 jobs and a tremendous need for power. And this is not that unusual, what we're seeing. And then as you look at continuing the reshoring of, and if the one thing I love about the tariff talks is it is saying that we want to do a more competitive, now whether they'll get there and do a 15% income tax rate for those that manufacture in the U.S. Again, it really is stirring a lot of that conversation more and more so on reshoring. So it's, stay tuned.
Deanna, I know AI is an interest area for you, and I wonder if you might just give some of your perspective on how you're viewing AI going forward and its effect maybe on the economy.
Yeah, so I probably spend more time thinking about it on how it impacts our company priorities. And what I would say there is it's going to be a powerful tool to make us more productive and ultimately hopefully spur growth as well if we use it right. We're also a big real estate investor, and so we have actually benefited from the data centers and have a lot of funds relative to that. So I think there's many different orders relative to AI. Obviously, you got to be focused on doing it responsibly within your company with data that you feel good about. And ultimately, where we're seeing the benefits of it, we still have people involved because you can't turn it over. Interestingly enough, it's kind of a sad story, but there's so much that AI is doing to create fake news.
That's right.
I had a colleague in another state that passed away, and I went out and looked for his obituary, and I got 3 different versions of an obituary, different ages, different causes of death, and so how do you, I think that's just an interesting impact that we have to think about that is actually perpetuating that perfection and the volatility that I think we're going to see just because there is so much news out and it's hard to understand what's really real. But you have to invest. You have to be focused on it. We have a huge push to make sure we're scaling our use cases and getting impact, both growth and efficiency, because our competitors are doing it. We have to do it as well.
I'll put a plug in for everybody. So when you're scrolling through your feeds and you're looking at headlines, just be very careful with the headline portion of it. The headlines can go out really easily through social media without there even needing to be an article behind that. And that can change the way you're thinking about certain topics and certain ways that you're viewing what's going on, because not everybody's got time to click through to everything unless, of course, it's a business record story, which we would love you to do.
Of course.
I'm going to we've got about 10 minutes or so before we get to our closing comments, and I want to try to go a little bit rapid fire here. So I'm going to try to hit on a couple topics and direct some of the questions, and we'll see how we do here. So, John, I want to talk a little bit about inflation and just maybe what you think the markets are seeing in that space and how you're anticipating that this year.
Sure. Obviously, we've seen over the last few years a very significant decline in the rate of inflation. Of late, it has been proven to be pretty sticky. The continued improvement has been very incremental, and we anticipate it'll be very incremental going forward. Getting down to that 3% level or so, still above that Fed target of 2%, and we think getting down to that level will take a lot of effort. We are seeing some positive signs in terms of some recent data that came out in terms of the rent component of inflation, seeing some improvement there because that has been one of the really sticky parts of that CPI composition. We look at that every month in terms of what's contributing to inflation, and interestingly enough, it has been services for a long time now. Not so much food, not so much energy, not so much goods, but services. And so seeing some incremental improvement in a component like rent is going to be significant to help push that incremental progress forward. But we continue to see that it probably won't get down to that 2% level this year. We might see once again some movement towards that. Now there are some things out there that could happen that that could change that. In terms of fiscal spending, we've had a tremendous amount of fiscal spending over the last couple of years. If that continues, we do see the potential for an increase in interest rates, an increase in inflation, potentially, depending on how that is rippling through the economy. But our base case, once again, is just to continue to see some very incremental progress at lowering that rate of inflation in 2025.
When you say services, what else would fall into that category? You mentioned rent, but...
Well, you think about things like insurance premiums. I think everybody can attest to the fact that insurance premiums have gone up substantially over the last few years. So medical costs, et cetera, those types of things all roll into that services component.
And Deanna, let me know that they are not property casualty insurance, so don't ask her any questions about fires in California and the effects. But I will say that we had some folks that are involved in the insurance industry, and the trickle down of that is going to be really interesting to watch. So, Debi, housing was mentioned as part of the inflation discussion. What are you seeing in that area as far as housing inflation, and maybe some of the things that you're working on that?
Well, from a good news story, so our portfolio of housing, because we lend to banks for first-time home buyers and obviously income qualified, our portfolio was up 15% last year. And part of that was 22% more for minorities, which is the highest we've seen in a very long time, which makes me very happy because that's an initiative that we've been working on. We have about 1,600 housing starts. That's just our portfolio that we incentivize, so that doesn't include stuff that's just happening in the marketplace out there, which is the highest we know in Iowa's history. I mean, for sure. You know, we still need to continue to look for ways through technology to bend the cost curve for housing. There's no doubt about that. But Matt actually shared some statistics with me, which I think is interesting, and it gets back to that whole insurance rate, what we're seeing. Because we're seeing few people that get to the finish line that can afford the house, but they can't afford what's happening when they add insurance and taxes on it. So it says here 2 out of every 3 American homes is underinsured. We certainly saw that in the disasters that we had in Iowa this year, both in the tornado. I think the first thing I did was call my insurance agent after that and say, am I adequately insured? Because these people thought they were, and they were not anywhere close. Nationally, 32.3% of the average mortgage payment is going to taxes and insurance. Now think about that. According to the Intercontinental Exchange, 26% of borrowers in Omaha are experiencing more than half. Now I can't imagine this. Half of their monthly mortgage payments are on taxes and insurance. So now you know why the legislature, every time they go to knock on someone's door during the summer, the only thing they talk about is property taxes. And so, so you can expect that there will be more conversations around that this year. But those are staggering numbers when you really think about what's happening. Those are some of the new things that we've been following. But at least in our portfolio, we're seeing some nice increases.
Michael, from a tax cut perspective and looking at those, what are maybe some things we should be watching here in the coming months? And is there anything businesses should be thinking about right now?
Yeah, I think there's a few things. I think one thing to really keep an eye on, I mean, we've kind of all heard what the tax promises are, so that's easy to do. I think you need to think about what are the pay-fors to get these tax savings. I think you need to keep a focus on that for one thing. I mean, we talked renewable energy here. There's a lot of credits and money that was set aside for renewable energy in the last administration. This administration doesn't like a lot of those. Congress doesn't like a lot of those. I think we'll see what they can cut back on will be something they're looking at. Now, it's interesting when you kind of look at where a lot of these renewable energy projects are. They're actually in Republican congressional districts, so it's going to be a hard sell to maybe cut back on a lot of them. But electric vehicles, I think. Other things to kind of keep an eye on is what's going to happen actually at the IRS. I mean, there's a freeze on all government employees, but the IRS actually has a longer freeze than any other organization. So I think it's going to be interesting to see how that plays out and whether that's going to actually cause some of the downsizing that they want to get at the IRS. And then really, I think it's going to be, we've kind of touched on it here, but it's really the deficit the government's in. I mean, for them to do this tax stuff, there's a lot of people on the Republican side that are very conservative and want to cut spending. And so how do you cut spending? Because tax savings costs money. Just to make the personal tax exemptions that expire here is $4.9 trillion, close to $5 trillion. Where are you going to find $5 trillion? Going back to it. So I think you're going to see a lot of, even though they showed unity this week early, you're going to see a lot of discussion over the next few weeks. I think that's key because people do want to cut spending. in the Republican Party. And so it's going to be, I think those are the three things. Because like I say, what they want to do is pretty obvious. They'd love to have some wish lists like the 15% manufacturing. That's going to be hard because that's going to cost a lot of money.
Yeah.
So I think those are the three things I would really keep an eye on. And to the extent you see any tax bills out there that are actually seem broader, the only other thing I would say, look to see who sponsored them. If you get bipartisan support on any bill, whether it's tax or not, that's a good sign for that bill, whatever it may be. If it's only one party or the other, not a good sign that it's ever going to get out unless it can go through budget reconciliation. Last point, just so you can, on the other, keep an eye on the Senate parliamentarian. In this budget reconciliation process, she probably actually has the most control. In this process, she has to say yay or nay whether this proposal meets the fiscal or budgetary constraints that budget reconciliation requires. And she's been in this role, I think, since 2012. She's really going to be the key player. So look for things that she talks about, saying, yeah, that'll work, or no, that won't work.
That's a good point.
Hey,
Chris,
go ahead, Debbie.
just to add, because one of the things that we're looking at is I believe that there's going to be really stiff competition for capital, because you talk about the debt, but you also look at all this debt that's going to roll over at higher interest rates this next year. And, what I've seen or heard about is $1 trillion of corporate debt will roll over at a higher rate, $1 trillion of that tied to real estate, and that doesn't count the federal debt, about $10 trillion is going to roll over at a much higher interest rate. So what does that mean for us in the field of economic development? Well, it means liquidity is going to be very, very tight, and capital is going to be challenging to find. So again, now everybody's really bullish that we're just going to grow our way out of it, and I think in time, with the right policies, that's certainly true. But again, that gets back to that short-term pain that we're going to experience as we work through this, getting back to some fiscal responsibility and constraint.
Michael, you mentioned the debt ceiling, and lost, I think, in a lot of the wave of the news last week is that I think we did reach a new threshold, and I'm going to stop there because I won't remember the proper wording. Where is there a mile marker time-wise where the next spot will come? I know we've looked at that, and everyone kind of at this point rolls their eyes a little bit, but.
January 1st was when, quote unquote, the debt ceiling was reached, but they don't really, as they go through their accounting management skills, it's really about June, probably when they're really going to have to do something to deal with the debt ceiling, is what they estimate that'll be there. So again, I think things to look for, at least what I've heard on the Hill when I've been up there, is disaster relief, because they're going to have to do some with California. Everyone's on board with that. Maybe they'll do some with the debt ceiling then, not try to find it there. I mean, Trump certainly would like to have had it done before he came into office. That didn't work. So now it is going to be his issue during his administration, but they'll look for a couple of vehicles, I think, to do something. They know they're going to have to.
All right, I'm going to do one last question, then we'll go to our close, and so I want you to be brief, and then I'll give you an opportunity at the end to give a final closing thought. I always like to ask the question, what's the thing we're not thinking about that could be a challenge or could be an issue? So let's go on down the line, be brief here. We'll give it 30 seconds or so, but maybe something that we're not thinking about from the economy, a black swan type thing. Obviously, it wouldn't be a black swan if we knew what it was, but is there something that you're kind of worried about and thinking about? So, John, I'll start with you.
Yeah, I think Michael just kind of touched on it in regard to the level of spending that we've seen over the last few years at the government level, and also the debt that's been accumulated. And it's been a situation where we know it's a growing issue. It's going to have to be dealt with at some time. We really haven't yet, but at some point it does get exasperated if it continues. And I think the concern we have from an investment management perspective is what impact does that have on interest rates, potentially raising interest rates as investors look at U.S. debt and prospectively say, we're going to demand higher yields. There's a term for that in the financial markets that are referred to as the bond vigilantes, and watching over the fiscal standing of the U.S. and taking a look at how that's playing out and what type of interest rate structure they think is going to be needed to entice people to continue to invest in U.S. debt, which would then have a ripple effect to other types of debt, et cetera, and throughout other aspects of the economy. So I think that's one of the things, once again, it's been percolating under the surface for some time, but I think there is a risk that it becomes more to the forefront.
Michael?
Yeah, I think I would, going back to tariffs just a little bit, I mean, I think with a global taxation, that Trump kind of fired the first salvo that, he may use tariffs to go after these global tax deals that with the OECD and others, and then that's kind of unique nature, and then that could lead to using code sections, and I hate to use code sections in an open forum, 891, 896, which allows for the doubling of the tax rates on foreign companies. So watch out for that. I mean, these are provisions that have been around since 1936, 38. One of them, I mean, never been used, but I mean, it is something he could use, and that would certainly impact inbound investment into, this country as well as Iowa, I think.
Yeah.
Debbie?
And mine was just what I said, the competition for capital.
Great. Chris?
Hanging out in the background of my comments is that we are now in the 7th year of a 5-year farm bill. The 5-year farm bill was passed in 2018, and we have had 2 one-year extensions since then. The question is, what does getting a farm bill done look like in a world where you have DOGE, right, and everything is under a magnifying glass of scrutiny? Our folks are working hard on getting that done, but that is something that's hanging out there in the background of this whole farm economy discussion.
Deanna?
Yeah, 2 things I'll mention. So we are a global company, and so the weakening of other currencies is something that's impactful to ours, and the ripple of just how those emerging markets are being impacted from a strength perspective. And I think, that's just something to keep an eye on, because global growth has come a lot from some of those emerging economies. But Chile just reached an all-time low from a currency perspective, and that has ripple effects there for the global economy, as well as companies like us that have businesses there. And I think probably both a social and an economic impact is that widening gap between the haves and the have-nots in the U.S. economy. And I think some of the talked about could make that worse. And I think making sure that we're continuing to have a strong middle class is foundational to U.S. growth.
All right, before we finish, I want to give the panelists each a chance to give a closing thought, maybe an optimistic note to send us out here with, since I made him scare the heck out of everybody with 5 minutes left. So before we do that, a couple things just to let you know about. Again, we barely scratched the surface of these topics. We're going to continue to cover them. Our economic forecast issue was out on January 17th and has some deeper coverage of this. I think we've got copies on the table. You'll also find a story about our CFO of the Year, Kip Albertson, in there if you want to learn more about Kip and his work. If you're a member, you'll find today's coverage in your mailbox on February 7th. If you're not a member, of course, we'd love to have you subscribe either to our print product or to our free daily e-newsletters as well. A couple upcoming things. If you enjoyed today's event, our next Power Breakfast is going to be on Thursday, February 13th. The panel is going to be discussing the challenges that cities are navigating right now with property tax change and some of the potential effects on regional growth. That one's already filling up quick, so if you are not registered, you can do that at businessrecord.com/events. And on April 1st, we'll have our 40 Under 40 event to celebrate our 2025 class as well. I want to take one extra moment to give a special shout out to somebody on our staff. We've got a staff promotion that I want you all to be aware of. Just yesterday, we announced that Sarah Dean has been promoted to editor of the Business Record. Let's give her a round of applause. Sarah's in the back. Go ahead and stand up. I didn't tell her we're doing this, so just give a little wave. Sarah's a Drake University grad. She's an award-winning journalist who's led our innovation coverage since joining the Business Record in 2021, and she served since 2023 as our digital news editor. She won 2 awards for our industry association for Best Innovation Writer in the country. That's 40 business journals from across the country, so we're really lucky to have her leading our team and our newsroom. She's going to do great things, and if you have news to share, she's your primary point of contact, and I know you all have great stories to be sharing with us. So let's give her one more big congratulations. All right, final question. You've had some time to think. John, I'll have you go ahead and start us off. A final takeaway for the audience today.
Well, despite all the challenges that we've discussed throughout the presentation here, our base case is a positive one. We do anticipate that we will see equity markets move higher this year. We're not anticipating that interest rates move higher from the levels they're at. If so, it won't be a meaningful rise. So in that regard, in combination with some continued positive economic growth here in the U.S., we'll leave you with that optimistic view of markets and the economy.
All right, Michael?
Yeah, I would just say keep your eye on the next 2 to 3 weeks. You always hear people talk about the 100 days in administration. The next 2-3 weeks, I think, will be key to seeing whether or not Congress, or at least particularly the Republicans, can move anything, whether it's border or tax, because they'll have to start the budget resolution process this month, or February, I should say.
Yeah, so I'm going to close with, we had a conversation with a site selector that's landing a lot of these big deals around the country because she wanted to meet with Governor Reynolds, and this is what she said. Even though we came through a very soft 2024, she said, I want you to know all eyes are on Iowa. And the reason why is because we're managed well. She complimented the governor. She said, you know, we went to a flat 3.8% personal tax January 1st. 2025, we get rid of inheritance tax. As we already said, we got rid of retirement taxation on retirement. Corporate did not go down last year because it has that safety net, but we fully expect to get to that projected 5.5%, hopefully by 2026. And we're doing our own red tape review, so we're going through regulatory review of all of ours. So the good message was that all eyes are on Iowa, so we expect good things to come.
Chris?
I think there is a really big opportunity to keep and attract food processing here in the state of Iowa. To Debi's point, Iowa is a business-friendly state, so I think Iowa is a very key agricultural producer. Combining efforts from our state government with the business community and with everything that agriculture does in this state. I'm not the first person to say this, but I think that ag processing is a major opportunity here.
And Deanna, close us out.
Yeah, so I would just encourage everyone, we talked a lot about volatility, uncertainty. That means your employees and your customers are going through those same questions, and so stay close to them. Make sure that you're listening to them, but also providing insight that can be helpful from them as well. And so our phones ring off the hook in any day that the markets are volatile because people just want someone to talk to. They don't actually do anything. Very few of them actually move their money, but I think it's just a reminder that instead of us just talking to each other, we need to make sure we're talking to our customers and our employees as well.
Thank you, Deanna, and thanks for the reminder to keep your folks close, and thank you all for being here today and spending some time with all of us to learn a little bit more about the economy. That's what it takes to help us be a strong growing company and a strong growing community, so thank you for that. Thank you to Raymond James, our presenting sponsor, the Iowa Bankers Association, Iowa State University, Security National Bank, and of course Deloitte. Your support helps make this event possible. And congratulations again to Deloitte CFO of the Year, Kip Albertson. Let's give him one more big round of applause. A big thank you to our staff that puts this together, Stacy Thompson and Sarah Brown and John Retzloff, all the team and our design team that makes this possible. It takes a lot of hands to make this work, and thank you to the FFA and Richmond's team as well. Again, our goal, I say this each and every year, is to help you do business better. Everything we do, that's the benchmark that we put it against when we host events or we do stories, articles, that's what we try to do. So if our newsroom or our advertising team can help you in some way, please feel free to reach out. We're here to help and help you do business in 2025 and beyond. So finally, we want to make sure to thank our panelists. Let's give them a big round of applause for going on display today. Again, I'm Chris Konetsky, President of BPC. If there's anything we can do for you, please feel free to reach out. Thank you for attending. Go make some good news for 2025. Thanks, everybody.